Episode number 352, the ultimate podcast on health savings accounts. Health savings accounts really are the most incredible tool available for retirement savings. Unfortunately, too many people that I meet with are missing out on using health savings accounts as part of their retirement strategy. So I'm going to do a deep dive into this subject, and I really am hopeful that you just get a ton of value out of our time together. But before we do, I was researching and I came across a couple little things. And so I thought we'd do some trivia here to get the show started. I will give you the questions, and then at the end of the show, I'll give you the answers to the trivia questions. What is the largest denomination note currently being issued by the Federal Reserve? Now, when I say note, I mean dollars. What's the largest bill that the Federal Reserve currently issues? That's the first question. The second question is, whose picture has been on the $100 bill since 1914? And then my last trivia question for you is, can you name two people whose picture appeared on the $100 bill before 1914? Okay, so as we dive into this topic of health savings accounts, I want to start out at a high level, and then we're going to get into more of the specifics and some strategies for you to consider regarding health savings accounts. I've compiled a bunch of resources, a lot of links to articles and resources that I know that you're going to find helpful. They're going to all be available to you in the show notes. Just visit episode 352 at soundretirementplanning.com and click on episode 352 to have access to all of the show notes. Health savings accounts have only been around since 2003. And I found a report by the CDC from 2018 that said among adults between ages 18 to 64 with employment-based coverage, the percentage enrolled in high-deductible health plans with an HSA increased from 4.2% in 2007 to 18.9% in 2017. So the good news is more people are learning about these accounts and more people are utilizing them, but still only 18.9% of people are using the high deductible health plan in conjunction with a health savings account. How do you qualify for a health savings account? There's a couple of things here. So number one, you are covered under a high deductible health plan. You have no other health coverage. Now, there are some nuances here that are pretty random, and I'll refer you to IRS publication 969 if you have questions, but you can't generally have any other health coverage. You are not enrolled in Medicare, and you can't be claimed as a dependent on someone else's tax return. What are the benefits of an HSA? You can claim a tax deduction for contributions you or someone other than your employer make to your HSA, even if you don't itemize your deductions on Schedule A. Contributions to your HSA made by your employer, including contributions made through a cafeteria plan, may be excluded from your gross income. The contributions remain in your account until you use them. The interest or other earnings on the assets in the account are tax deferred. And distributions may be tax-free if you pay qualified medical expenses. An HSA is portable. It stays with you if you change employers or leave the workforce. If used for qualified medical expenses, the money comes out tax-free. And unlike an IRA, you don't have to wait until age 59 and a half to start using the money penalty-free. As long as the money is used for qualified medical expenses, you can access the account with no penalties or taxes. So in essence, you get the benefits of the tax deduction like you would from an IRA and tax-free income like you would from a Roth IRA. It combines the best of both worlds, tax deductions and tax-free income when taking the money out for qualified medical expenses. It's more liquid than an IRA because you don't have to wait till age 59 and a half to access the money without a penalty. Unlike an IRA, there's no required minimum distribution, so you will not be forced to take withdrawals at age 72. Money in an HSA is carried over to future years. And if the HSA is being offered through your employer, it's a portable benefit, meaning that you can take the HSA with you if you leave your job. So this makes the HSA unique compared to some of these other health savings accounts that are available, such as a FSA or an HRA. Please note that the HSA is different and, in my opinion, better than the FSA or HRA. FSA stands for Flexible Spending Account. HRA stands for Health Reimbursement Arrangement. HSA stands for Health Savings Account. Because there are so many different types of these accounts, it can be confusing. Today, we are talking about HSA, Health Savings Account. So why would you want an HSA? And there are several reasons, but I'll give you a couple. Number one, Fidelity's recent study states that on average, a 65-year-old couple will spend about $300,000 on healthcare costs in retirement, not including the cost for long-term care. So we need to plan on how to pay for healthcare in retirement. If we only have money saved in IRA and 401k accounts, and then we have a medical expense, we'll have to pay taxes on every dollar when we pull out of those accounts, even if those dollars are used for health-related expenses. Whereas if you have an HSA, you can access that money tax-free. That's incredibly valuable. Number two, health insurance is expensive. I don't know about you, but I get zero joy from spending money on health insurance. But it does provide me some peace of mind. If you're healthy and don't spend a lot on health care and medical costs every year, a high deductible health plan helps you keep your insurance expenses low. With insurance, for me personally, I want as much as I need, but not a penny more. Number three, the HSA is an account that can be invested for long-term growth, but not all HSA providers have investment options. Number four, because dollars contributed to an HSA offer a tax deduction, it helps you pay less money in taxes every year. So a question would be, if these HSA accounts are so good, why are only 18% of Americans using them through their employer? Well, with this podcast, I hope to change that. I hope the high deductible health plan and HSA health savings account become one of the most utilized retirement accounts. So please be sure to share this episode with people you care about. Now, choosing health insurance. There's a lot that needs to be considered with which health insurance plan you will choose. If you know that you're going into a season of life where you're planning on higher medical expenses, such as maybe you're planning to start a family. Sometimes those babies coming into the world can be really expensive. Or maybe you're planning for some type of surgery, maybe a knee replacement surgery or hip replacement surgery, or you're going to have a back surgery. Then it probably makes more sense in those instances to choose a low deductible health insurance plan if you know that you're going into a season with a lot of medical expenses. What are the requirements for the high deductible health plan to qualify as HSA eligible? It's possible to have a high deductible health plan that is not HSA eligible. So a high deductible health plan that's HSA eligible in 2021 means that if it's a self-only plan, it needs to have a minimum deductible of $1,400 for the year and a maximum out-of-pocket of $6,900 for the year. If it's family coverage in 2021, it needs to have a minimum annual deductible of $2,800 with a maximum out-of-pocket for the year of $13,800. Even when I see people that have lower deductibles that have healthy families, let's say they have a lower deductible of $500 per year, I see a lot of families who are not even meeting their annual insurance deductible every year. And so this is where the high deductible health plan can really make a lot of sense. Comparing plans. I recently visited the Washington State Health Plan Finder website to compare plans. I looked at a few offerings in my state and in my county. And this is just a hypothetical make-believe couple, but I assumed that there was a married couple. They're both age 40. And I looked at a low deductible plan versus a high deductible health plan that was HSA qualified. And then I also looked at a high deductible health plan that was not HSA qualified. When comparing the low deductible plan to the high deductible health plan that's HSA qualified, the monthly cost savings was anywhere from $200 to $300 per month for the high deductible health plan compared to the low deductible plan. So if you opted for the high deductible health plan and you don't have a lot of medical expenses, you could be saving $2,000 to $3,000 per year in insurance premium expense.